Hey guys, Jesse Klein here, Justin Klein with the Klein Real Estate Team. Don't mind our goofy little cord. Lost one of my AirPods, so this is what we're doing this week. And we've got a new stats release for you. Actually, our first stats release video we've ever done. We're super excited for it, and this is for the month of August. And it's for Greater Vancouver and the Fraser Valley and the Chilliwack Real Estate Board as well. And so we've got another month of a massive price decline. As you can see on the screen here, Fraser Valley detached houses dropped another $78,000 this month for the sixth month in a row since February. Pretty wild. Now, we are expecting this crazy straight downward slope to finally plateau or even increase a little bit this September. We're seeing a lot more activity out in the market and prices are going to change. Prices have actually come down so far that suites in Surrey or Langley or Abbotsford or Chilliwack are actually cash flow positive now if they have two suites. Now, two suites isn't necessarily legal. One of them is going to be unauthorized. But because the city of Surrey and the township of Langley and lots of these municipalities are so short on rentals, they're actually kind of looking past that unauthorized suite for the time being at least. And unless somebody directly complains, like a neighbor or a tenant, they're probably not going to shut it down. If you guys are interested in one of these properties that is cash flow positive now, send us a message. We'd be happy to share more information about that with you.
Awesome. So let's take a look at what these price declines actually were from July to August. For the Fraser Valley, detached went down 5.9%, same as condos, 5.9%, and then townhouses went down 6.8%. Out in Greater Vancouver, detached went down to 2.9%, townhouses went down 7.2%, and condos 1.2%.
Yeah, so condos holding up quite well in Greater Vancouver. Fraser Valley getting hammered a little bit. And also this was a pretty rough month for townhouse in the Fraser Valley, especially in Langley and parts of Surrey. Townhouses dropped $50,000 to $80,000. It doesn't show up in these more broad stats, but if you look at it individually, then you can see it.
Yeah, and taking us back to 2019, just to kind of give you a picture, we put together this chart. So pause the screen in a second. It's a great chart. You can see back in 2019, the growth up to where we are now, also the growth of up to where we were at the peak.
Yeah.
You can see we're still up 30%, even though that our prices have dropped the substantial amount since 2019.
And you can watch our video on payments and how that relates to prices and interest rates and where we think the market's going. And that's going to explain a bit more about that increase over 2019. So even though we have these massive month over month declines of $50,000 and $80,000, the market is actually picking up again. And it doesn't quite show up in prices yet. The real estate market's slow. It's not like the stock market where people start to smell a bit of a bull and then all of a sudden the stock shoots up 25%. It's not like that at all. So even though we have these massive month over month price declines, $50,000, $80,000. What we're not seeing in those stats is that the market has picked up. And we started noticing about this and talking about it last month. We were getting more showings and more calls. We're actually seeing in our data where for the first time in quite a few months, the sales volume actually increased in August over July, which is interesting because traditionally August is quite a slow month. And on a seasonally adjusted basis, sales are actually up about 5% month over month in the Real Estate Board of Greater Vancouver and the Fraser Valley.
Last month, we discussed this opportunity where you could jump from a townhouse to detached with, very little equity on top.
Yeah.
The opportunity is starting to change. So we've actually seen where townhouses have come down at a faster rate than detached over the last month, and those detached houses around $1 million, they're boosting up.
We had a sale in I think early July for $900,000 for a rancher in Langley, and then one across the street listed in July at $999, and they got 12 offers. Yeah. So there is a bit of a bump here, and then people kind of realized like, oh wow, I can sell my townhouse and buy detached with a suite and not pay any extra per month. Yeah. So that closed the gap. Townhouses started going down, detached caught up a bit.
Totally, yeah. So I'll show you what it looked like in Willoughby there for the townhouses. You can see they're coming down sharply.
Yeah, and they were holding. That's when we were telling people, hey, this is a good time to make the move. And then this month, people caught on and it just took that dive. So
yeah. So the opportunity we're seeing now is slightly different because we're going to have this slight jump here in September, October. We think this would be a better time to sell, and you cannot buy till November, December, January, sometime in there, because we think it's going to be a very slow winter for real estate.
Yeah. So while, it still makes sense, the numbers for townhouse to detach, it's not as juicy as it was a month ago. It's still a good time to do it. And ideally, I think there's going to be a really good opportunity if you can sell into that September, October market strength and then buy in like a November, December, January, where detached listings are probably going to be sitting on the market for a few months. Sellers are going to be getting antsy, wanting to sell, and you can come in with a lower offer, which traditionally happens every winter.
Totally, yeah. And the interest rates are only going to help with that as interest rates continue to go up.
We got another raise on the 7th.
Yep.
We're going to do a video about that next week, so be prepared for that. We're going to talk about it, 50, 75, even maybe 100 bips. So that's going to be really interesting.
That will be, yeah. So condos are actually starting to show a lot of weakness. We've seen their sales dip in August compared to July, unlike townhouses and detached there. We might even see more supply come on for condos as investors start listing because of the renewals of their mortgages.
And we're probably going to do a video on that, kind of breaking down in more detail why we might see this new supply from investors. We're going to talk about what they paid for the condo, what the rents are, and why the cash flow is going negative or even more deeply negative. So we'll talk about that in more detail, but it could be a potential source of supply, and supply is bad for prices.
Terrible.
So let's talk a little bit about the other stats that were released this month. Supply is still low. Supply is 10 to 20% below the average for August, and new listings are low as well. Those are about 20 to 30% below the 10-year average for August. And what that does is it makes it for a tight market, and now we have these sales kind of increasing. We have supply coming down. People aren't listing. Sellers don't want to list because the market sucks, and everybody knows that. And they look at this chart and go, oh my gosh, my detached house is worth $500,000 less than it was worth earlier this year. Forget it. I'll just wait. Nobody's really distressed right now. And so we've kind of got this interesting kind of recipe combusting into the September market here, increasing sales, lower listings, but then also a massive rate hike potentially coming next week. So September is going to be really interesting. I know the market's tight. We're going to see a bit of gain, but it's going to be interesting. So talking a little bit more about interest rates, check out this chart showing the probability that the Fed in the U.S. increases interest rates to 3.75% by the end of the year. That probability is in the mid 90% right now. Currently, we're at 2.5%. So that's a 1.25% increase, which is huge. And Canada usually follows the Fed super closely. So what that means is that we could see variable rates, which are right now at 4.2%. We'd add 1.25% to that, brings us up to 5.45%. Now, there's also about a 50% chance that we hit a 4% interest rate with the Fed, which would bring variable rates all the way up to like 5.7%, which is getting up there. Fixed rates are already pricing this in. Those are probably going to stay around the 5.2% mark, depending on what happens here. But this is going to be bad for real estate later this year. So keep a really close line on interest rates. And this is why we're not too bullish on the winter market. You combine seasonality and, maybe we get a bit of a listing bump this September too. So we have more stale inventory. Who knows? Maybe not. But we know interest rates are going to be high through the winter. And that's going to be really hard on buyers as these variable rates move up.
So where do we think prices are going to settle? No one really knows for sure, but we do know that prices are still 35% higher than 2019, like we showed. But mortgage payments are more than 50% higher than 2019.
And what's amazing about that is prices actually peaked about 80% over 2019, even 100% in places like Mission, Abbotsford. Yeah. And Mission detached is down 37% now, which is wild. Anyways, I'm distracting us. Get back to your thing, Justin.
It makes sense for mortgage payments to be up to an extent. Rents are up 15 to 30%. There's a natural inflation, of course. But 50% is just too much.
Over the long run, And sellers will, we got the supply-demand dynamic in the short run. It doesn't correct instantly, but it has been correcting hard. And if interest rates stay up, like you were saying, we're going to see those mortgage payments come down for that 50% over 2019 mark. It's got to match up with rents. And that'll bring prices down if interest rates stay. Over the long run.
There's always this balance that we revert back to. And we actually did a video on this, and a part 2 of that series is coming out in a few days here. So
it is,
make sure you subscribe, like this video, and don't miss out on the next ones.
Thanks for watching, guys.